Okay, good morning, guys. Good morning. I hope you're all well. Looking forward to the session ahead. We've got some pretty interesting movement to have a look at overnight. I think overnight movement, certainly the S&P gets the prize. Interesting pop to the upside in the early hours of the morning. Technically, of course, this was assisted. It was a very important technical level, 2023.50, the double top for the last two sessions, Tuesday and Wednesday's highs, including it being the pre-FOMC high yesterday. So that just gave way overnight. We popped and accelerated up, and for now we've found resistance at the low point back on the very beginning of Monday's session. So, I mean, this was a pretty big move. It's not far off a 20-point breakout here. And just trying to sift through some of the overnight news flow to figure out what generated it. And it does seem to be mostly related to a comment from Fed's Evans. But we'll talk about that in a sec. Let's just review what happened at 7 last night. We obviously had the FOMC minutes announced. And I mean, if we just zoom in, I mean, let's have a look at the S&P on a shorter time frame over the minutes, and you can see here that you know, in the grand scheme of things, nothing happened. You obviously got oscillations both ways. Initially, the S&P dipped lower, but you know, we're only talking sort of 5 points or so, and then it's all really a bit of a mess and very noisy. And come the end of the session at the close, we were very much trading still within that little tight range. So from the stock market's point of view, what the Fed had to say for themselves last night was not particularly exciting. So what we did get, so most people on the 10-strong Federal Open Market Committee basically agreed with Yellen in that the move to drop the central bank's forecast about keeping interest rates low for a considerable time should be seen as a signal that it will not raise rates at its January or March meetings. So the main theme, as confirmed, this isn't new. The minutes just reiterated the fact that the earliest possible hike is going to be in April. But more likely, still the consensus, I would say, is probably for a June hike, okay? But just the minutes re-emphasize the fact that, you know, we shouldn't be expecting any rate hikes anytime until at the very earliest April. The committee said in December that its decision to instead describe the Fed as being patient, so rather than using that considerable time period, they flipped and used the word they're going to be patient about when to raise rates. And the minutes last night really showed that that did not mean that it had brought forward its plans to hike. However, the members of the Fed did feel the need to stress that the timing of the first hike would depend on economic data. So all of this is absolutely not new. All of this is stuff we knew already, and you know, the minutes didn't really indicate this. I mean, the thing about the minutes, I think this time round, because we got a change, because we got a change to the statement 3 weeks ago. You know, the meeting at the end of December, the statement delivered a change, and I've already described what that change was. They removed considerable period and put patient in, and so normally the statement doesn't change. I mean, more often than not, the statement's pretty much the same as the time before, and so in the event the statement remains largely unchanged, the minutes become more important. The minutes that are released 3 weeks later become more important because we try and use the minutes to ascertain when the next change is going to be. But when the statement delivers the change in itself, the minutes become less important. I think this was a good example of that. So I think by and large the minutes don't really mean much. There was a couple of things of interest, I would say, and mostly it was about inflation, and I would say it's marginally, well, some of it's hawkish, but you could interpret it as dovish as well from a different angle. So let me explain. While officials still believe that inflation would remain below the target of 2% for some time, the minutes made it clear that the drop in headline inflation would not be enough in itself to stop the Fed raising rates, as long as the US economy continued to improve. So that's the clearest we've seen, that the Fed are prepared to hike rates even if inflation is below their target. Even if headline inflation is below target, as long as the economy is strong, they're going to hike. Now that is new and that's hawkish. However, to kind of counteract that, well actually, hang on, before I say the opposing comment, they then touched on the core inflation, and they said as long as core inflation is around about current levels, then we can hike. So core inflation's around, well, it's actually just below 2%. Actually, let me get a chart for core inflation, because this is important now, because really, obviously the price of oil has declined sharply, and this is having a notable effect on the headline inflation. I'm going to show you a chart of core inflation. It's 1.7%, so let me just bring this into screenshot here. Core inflation's 1.7, it's been 1.8, since the summer we hit 2% in 1 month. I think that was May, and it's tracked lower to sideways ever since. Now their target's 2%, remember, and so what the Fed last night said is, as long as core inflation's around here, we can hike rates. Doesn't matter if headline inflation's dropped, because mostly that's about oil. So as long as the underlying economy's strong, we can hike rates even if inflation is below target. So I think that's quite an important, subtle change to the rhetoric. But I think a lot of this is priced in. When you're looking at things like the dollar, I mean, the dollar's been so strong. The euro dollar trading and testing the 118 handle yesterday. You've got cable making its inevitable way towards 150, it would seem. Huge trend just this year, and more acceleration of the theme of dollar strength. And that shouldn't change off the back of these minutes last night. Those comments that they can hike even if inflation is below target is fairly interesting. People have been assuming that wasn't possible, that they can't hike until inflation picks up, but apparently that's not the case. Now, the only other thing about this was their inflation expectations. So by the end of 2015, they had previously thought inflation would be at 1.8%. This is headline inflation. They've now chopped that target to 1.3%. So that's kind of a dovish move, dramatically lowering inflation expectations, but they hugely offset that by saying, no, we can hike rates anyway. So I think the bottom line is, as long as core inflation doesn't drop, we should be really looking at other economic data to determine timing. And so what other economic data do we have? And we did have some employment news from the US yesterday, and I did downplay it kind of in the morning in terms of its importance. We had the ADP employment report, and it came in nice and positive, better than expected, 241,000. 225 was the expectation. This is for the number of jobs created in December in the private sector. They also revised up the month before to 227,000. This is the highest number since June. As you can see on this chart, there's only one figure in recent times that's been better than that, and that was that weird kind of June spike to 281,000. So, you would say this, if you take out that very sharp spike in June, then what you're left with is a very, very steady upward trajectory, with the number of jobs being created steadily rising. I said, though, yesterday that this has been a very poor indicator towards non-farm payrolls, but if you just ignore the fact that it should be related to payrolls, if you just look at this data on its own, well, it shows a nice, steady, improving trend. And so, the labour market trends are undeniably strong, and if this remains to be the case for the next 4 months, are we going to get a rate hike at the end of April? If we get January, February, March, April ADP and payrolls reports that are very strong, as long as core inflation hasn't dropped, well, we may get a hike. And I think the dollar's kind of pricing that in a little bit, but I don't want to get ahead of the game here. At the moment, consensus timing is definitely not April. It's almost